Hey guys, Philip Shaler here, local real estate agent in Los Angeles. And today we talk about the real estate market, what is going on, the bank failures. The Dream for All program has already been depleted after 2 weeks of its launch. Let's dive right into it and see what's going on in the real estate market. Let me share my screen with you here. Let's go right in here. So today what we'll talk about is inventory has lowered slightly again. We started the year with 75% more homes on the market than the year before. So why is that? Because sellers don't have to sell. Remember, sellers have high equity and low interest rate. If they do sell, they're in the same shoes as buyers would be, buying something more expensive with a higher interest rate. Mortgage rates are around 6.5%. According to Fannie Mae, mortgage rates could come down closer to the fives by the end of 2023. And this is very possible because the Feds, here, let's look at this. The Fed raises interest rates high again in what could be its final attack on inflation. Now, here's the thing about that. I think the Feds were a little bit too late and too aggressive with their interest rate hikes. And we clearly could see that with the bank failure, because I think the banks didn't really have enough time to react fast enough of the quick and steady rate hikes that we've had, interest rate hikes we've had. So they couldn't sell their assets in time. They basically sold their assets in pennies on the dollars and lost their shirt. It was also probably bad investments on their part. I'm not the expert here. This is just what I've been reading about. However, what I would say is that it could be safe to assume that the Feds now are going to stop with raising interest rates again, because if we look at the situation over here, the another bank is in trouble now, which is the Pacific Western Bank. Their value has almost dropped 50%, which is huge. So PacWest shares plummeted by 52%, as you can see right here. So again, I think the Feds might think twice about raising again, because they could potentially cause another bank failure. So, and I think, I'm not the expert here, but the more bank failures we have, it would not be good for the rest of us and for the economy. Going back to this here now. So CalHFA, the California Housing and Finance Administration, Dream for All, ran out of money 2 weeks into launch. We're going to talk about that. We're also going to talk about the ULA tax, which is a misleading mansion tax, which I think could be counterproductive. Let's look at the inventory really quick. Let's start out here. The inventory falls to 419,725 units. That is very, very low. That is houses only. It does not include townhouses and condominiums. That is single family residences only. However, that is very, very low. If you look at the 2017 line, the very thin line here, we're almost close to 1 million. This was a fairly healthy supply. We have now maybe a 2-month supply, 6-month supply would be healthy, 6 months or more. So this is also the reason why the prices are where they are. And, we're just in the middle of a 1031 exchange for an out-of-state client, and we're looking at some condominiums in Santa Monica in a $2 million range. And I called several agents, and 2 of them said to me right away, if you're thinking about offering anything less than asking price, don't even bother. Seller will not sell unless it's asking price or above. And frankly, they can do that because there is not enough inventory out there. And again, for the reasons I mentioned earlier, a seller would only sell either to move out of state or move out of the country. But if they sell and want to buy something else, they're going to be in the same shoes as buyers. They're going to buy something more expensive, maybe not necessarily bigger, but with a higher interest rate. So sellers are hanging on and don't have to sell. This is just the way it is right now. And this is something that kind of dictates the pricing, the market. Again, real estate is regional. This is mostly here in Los Angeles. Let's look at the price reductions. Less price reductions, fewer price reductions than 2019. So 29.4%. Again, the price reductions, sellers don't have to sell, so you're going to see less and less price reductions, in my opinion, because especially since the market inventory has fallen compared to the beginning of the year. There is not enough on there. And the reason why we can see that the demand is high is when we go back to the CalHFA Dream for All ran out of money 2 weeks into launch. California Association of Realtors urges Governor Newsom, who cut the program funding from 500 million to 300, why we don't know, to add funds to the Dream for All program. And here is California Realtors urge Governor Newsom to fully fund California Dream for All. So what is the program? Let me dive into this really quickly. The Dream for All Shared Appreciation. I think it's a great program. I think the Senator Tony G. Atkins has developed this program. And she is right here. And they took about a year to develop it. So it's kind of strange that 2 weeks after it was running out of money. What would that mean is that this is just a schematic on how it works if you want to look at it while I explain it. So basically in the Los Angeles County, if you make less than $180,000, you may qualify for the Dream for All program, which means the state gives you 20% down payment towards the purchase of a home as a first-time home buyer. And remember, after 3 years not having owned a home or being on title, you are considered also, again, a first-time home buyer. So you get the 20%, which has to be paid back. You also have to pay back 20% of your earned equity when you sell your home. So some people say it's not a good program. There's always risks involved, right? And there is one issue I could see that, let's say you own your home for 10 years and all of a sudden you sell it and you may have forgotten. So what I think CalHFA should do is every year or two, they should send you a reminder saying, hey, according to the current market value of your home, if you would sell your home now, you would owe us this and this much. So constant reminders, you don't forget. However, if this is the only way to get you in a home, I think it's a great way to go because rent will always go up. And if you look at the U.S. housing history, the housing price index since 1900, yes, you can see 1900, 1910, 1920, 30, 40. It's not really a huge difference, but from the 40s up all the way to now, it's just going up and up and up. There are dips, obviously, here and there. But so here's another thing. When I talked to CalHFA, I called them, and I think I talked to Pamela, and I asked Pamela, I said, would it be possible for a buyer who has already saved 20% down payment to put down 40%? In other words, to use the 20% from CalHFA, the Dream for All program, and to 20%. She said 30% is the max. So I didn't get a clear answer on that, but from what I understood is you could use the 20% from CalHFA, then put the 10% on from what you've saved up as a buyer who is interested in buying. So now you're putting down 30%. After close of escrow, you could take the remaining 10% and put that towards the principal. So now you made a 40% down payment. And with the current interest rate, 6.5, you would have to run the numbers. You would probably bring your monthly payment down anywhere from $1,000 to $1,500, maybe $1,200, $1,300. So a $5,000 mortgage payment would come back down to $3,500, which would almost be similar to a lower interest rate. So this is an idea how to use this program. Again, check with them to be sure that this is possible, but that's how I would suggest doing it. With the 10%, don't buy a car, put that money towards the house so you get a lower payment. Let's see what else we have. The Pacific West, yeah. So let's listen to this real quick, what they are saying in the news here.
Treasury are in a much more sound position.
So will this have any impact on the rest of us who didn't bank at First Republic?
It can have a ripple effect. And one of the biggest concerns of that ripple effect is not a 2008 style financial crisis like what we saw previously, but an issue with access to mortgages, access to credit. When banks face issues like this, because of the risks they took on, consumers who want to do more banking, who want to take on a loan to get a car, take on a loan to buy a house, take on a loan to expand a business, can face a more uphill battle because banks are tightening up. They're restricting some of that lending. So that could be an issue. So could some of the regulations that come along. That could end up in more fees down the road. But again, these are not things that have materialized yet, George. They're things that could happen down the road. The thing we know is that interest rates are rising. Those credit card debts are going up, whether or not any of this is going on in the background. And the best thing you can do for yourself, George, is pay off that credit card debt if you're in a position to do so, because it will continue to get more expensive, George.
So yes, she's absolutely right. It will continue to get more expensive. So if you're in the market of buying, you should definitely. Oh, let me just turn that off real quick. Where is it? Sorry. I would say that it's definitely important to pay off a credit card. That's if you can do that and look into those programs. You can also actually, there are other programs out there. When you go to ShadlerRealtor.com, I believe we're just rebuilding the websites, but on the main index page in a couple of days, it'll be available. There is a link to down payment assistance programs from the state, and you'd be surprised if you put in your area and the address where you're thinking about purchasing, and then put in your info. It gives you a number of programs that are available. So CalHFA Dream for All is not the only program. This was just an interesting program to get started by the Senator Atkins. Let's go back and see what else we had to discuss here. Oh, yes. So the EULA tax. So this is an interesting situation. Now, think about it this way. The EULA tax was, I guess, disguised or packaged in such a way so it's a mansion tax, meaning that people with mansions will pay extra money when they sell a property. But this is not really true. It's a tax for everything. So it could be a business building, it could be residential, it could be commercial real estate. So if you sell a property of $5 million since April 1st, 2023, you're paying a 4% extra tax. That's $200,000. And this is to pay for, to create housing, to provide funds to create housing for the less privileged. Now, if you were to be a developer and let's say you build an apartment building that's 10, 15, $20 million, let's say $10 million for the purpose of calculation here, that you would pay an extra $550,000 taxes in the city of Los Angeles. Remember, this is only in the city of Los Angeles. I believe it's San Francisco and Sacramento. This is also this is in the courts right now to be revoked. A lot of attorneys and association of realtors are not really happy with this, and also I think it may not be constitutional because it might be against the Constitution to just implement a tax in a certain city perimeter and not outside, not for everybody else. So this could backfire because if developers start thinking, well, you know what, if I build a building here for $10 million in the city, I pay an extra $550,000 if I sell it. But if I do it outside the city perimeters, I save $500,000. So they might do that. So this might backfire. I don't think it's a good idea. But anyway, everyone has their own opinion about it. I just think it should be revoked. Other than that, I think we covered everything here. The trends currently are increasing demand for affordable housing, as we clearly can see. And one thing I wanted to tell really quickly, one thing we could see about the CalHFA program is that since it ran out 2 weeks into the launch, it would tell us that buyers are eager to buy. They just need tools to make the purchase, like such as down payment assistance. So 2 weeks into launch, they stopped. So they had $300 million. So approximately, I would guess, if everybody got $80,000 or $100,000 or whatever, that approximately anywhere between 2,600 and 3,000 buyers are being helped right now to purchase a home. So there is obviously an interest, and the program has buyers who really pay attention. They perked up their ears and they jumped on it right away because in 2 weeks it ran out. So I think that is a big thing to consider, and I think they should definitely bring it back. Other than that, I believe, yes, so increasing demand for affordable housing. Again, the Dream for All is definitely included in that. Shift towards suburban and rural areas. Yes, if people cannot afford to purchase real estate in the cities, they will go out into suburban and rural areas. Rising home prices is a trend, and stricter mortgage standards. As you just heard in the news bit earlier, it might be a little bit more stricter for you to get a mortgage now, with the banks some banks being on shaky legs. So I would definitely recommend to possibly just really, how should I say, make sure that your credit is clean, that you have all your ducks in a row for a purchase, you have your down payment saved up. Don't buy anything new, don't buy a new car or open up a new credit card, because this will all be working against you if you start or if you think about want to purchasing a home. So anyway, if you have any questions about real estate or purchasing home or even selling your home, I think at the moment it's a good time to list your home. for the reasons I mentioned earlier, because you could, first of all, pretty much get the price you want as long as it's fair market value, maybe slightly above, and you can sit on it. So here's the thing. What we have seen is the days on market is anywhere from 45 to 55, even 60 days. So the condominium I mentioned earlier that we're currently have our eye on for the 1031 exchange from the out-of-state client is it has been on the market for 47 days now. So things are not selling fast, but sellers can definitely, what's the word, can definitely be stubborn or not budge with their prices because eventually they will get, it'll just take longer to sell. Anyway, any more real estate questions you have, please call me at 310-918-2260. And in the meantime, thank you so much for watching.